We were looking at the Union Bank press conference as well. Let's check out if that press conference has gotten underway. We were to listen to the Chairman and Managing Director, Mr. Arun Tiwari.
Now the entire organization talks in terms of risk-weight assets, not the increase in the advances numbers. So as of now, our risk weights are about 75% or so. All these things have resulted into those key numbers, whether we talk about cost-to-income ratio, we talk about ROA or ROE. Just to quickly put the things in perspective, if I talk about the ROA for the last 3 quarters, December, March, and then June 15, ROA from 0.34 in December, it went up to 0.47 in March, and now it's 0.55%. Similarly, ROE, it was in December 14, 6.6%. Next quarter, that is March, it was 9.7%, and now it has gone up to 11.2%. Similarly, cost-to-income ratio, which was 51.13% in December 14, decelerated to 49.38%, and now it's at 48.32%. Similarly, one more number which everybody is very interested in, as we said, our slippages would be contained quarter after quarter. So again, going back to our peak was September. In December, this number was 1,738 crores. In March, it was 1,547 crores. And as of June, this is 1,508 crores. And we are sure in the times to come, we would be adhering to our guidance, whatever we had given at the beginning of the year. Now, coming to the specific numbers, global business is up by 8.6% YOY to rupees 5,82,817 crores as on June 30th, 2015. Savings deposit grew by 10.6% YOY, while share of high-cost deposit declined to 5.4%, which was 13.5% a year before. So there is a nearly 60% drop in the high-cost deposit. Talking about the productive sectors of economy, in the advances side, retail, agri and MSME, which we together call as the RAM sector, grew by 16.6%, and now it contributes about 50% of our bank's domestic loan book. Net non-interest income for the quarter Q1 FY16 up by 13.3% YOY to rupees 708.
I think there's good reason why Union Bank has stock is rising. It's a secular improvement on several parameters like ROE, ROA. Cost to income has fallen. That is, the amount of money the bank spends to earn 100 rupees of income has consistently been falling from 51 to 49 to 48. Slippages have been falling. The amount of high cost deposits have fallen. So good performance coming in from Union Bank, and it's a trend performance maintained over the last 3 quarters. Is it time for us to get back to Punjab National Bank? If that,
The focus areas, MSME, retail have done very well. MSME has shown a growth of 21.80% as against the growth of 21.37% previous quarter. Retail has shown the growth of 25.3% as against the growth of 24.6% previous quarter. Housing loan, which is a part of retail loan, has shown a growth of 26.6% as against 26.4% previous quarter. Global business has gone up by 13.4%. Global assets have gone up by 13%. Global deposits have gone up by 16.4%, and global credit has gone up by 9.6%. I really feel that we are in alignment with the industry. Now about the profit. Interest income has gone up by 3.8%. As compared to previous year, it is slightly low. On quite a few things, the impact is because of a large amount of NPA, which we have been having, but our efforts are on to reduce it, and we have been quite successful in doing that. Credit growth, even though 9.6%, has been not as much as we envisaged. Probably in Q2 we are going to do better in that. And NII is also low, interest income is also low, because we had to reduce the base rate with effect of 7th of May 2015, whose impact was immediate. Other income has gone up by 13%. Operating expenses have gone down by 5%. Operating profit is flat growth, but is still at the level of 3,132 crores. Provisions have gone up by 40.2% as compared to the corresponding quarter. Net profit is less by 48%, but definitely more than 100% growth as compared to the previous quarter. Previous quarter net profit was just 307 crores, but this time we have been successful in announcing the net profit of 721 crores. Now about the provisions. Provisions for this Q1 are 1,291 crores, a decrease of 3.4%, and standard assets advances we had to provide 70 crores only, which is again a decrease. Then depreciation on investments, this I would like to speak a bit. The depreciation on investment, last year we got a write back of 381 crores, but this year we had to provide 375 crores. With the results, our net profit has been hit by approximately 800 crores. Had that not been there, our profit would have gone up to the level of 1,500 crores, which because of the market conditions, because of the yield curve, which didn't go in our favor, we could not achieve. Income tax, we have provided 600 crores, and others 77. With the result, total provisions are 2,411 crores as compared to 1,720 crores corresponding quarter last year. About the income breakup, interest on advances has gone up by 0.8%. Reasons for less growth I have already told. Interest on investments has gone up by 11.8%. Previous year it was only 6.5%. Other interest income we have shown a good growth of 43%. Then other income, of which fee-based income, the major part, has shown 2% growth, but recovery in return of accounts, we have done very good. If I talk in amount wise, 217 crores we could earn as compared to 91 crores corresponding year last year. So with the result, total income this quarter has been 13,432 crores, an increase of 4.7% as compared to the corresponding quarter last year. Then about the expenditure side, interest paid on deposits has gone up by 11.6%. It is because we have achieved a growth of about 16% in deposits, but in the recent past we have reduced the rates of interest, and we have been successful in containing the cost of deposit to the level of 5.99%. Interest paid on borrowings has gone down by 67%, and others has gone up by 50.8%. So therefore the total interest paid has gone up by 10%. Establishment expenses are negative, they have gone down by 12.3%, of which AS15 provisions have gone down by 36.8%. It is principally because about 160 crores which we were required to provide every quarter, that was required for second pension option, that liability has come to an end with effect from March 2015. Thus total expenses have gone up by 6.2%. Here it is important that I speak on one more point, that the interest income on others principally means it has gone up by 50% to 469 crores as compared to 311 crores previous year. It is because of the cost of AT1 and Tier 2 bonds which we had acquired during the year, amounting to about 3,000 crores. It was the right time that we acquired at that time. With the result, even though our interest expense is not gone down.
The Maruti numbers have come, and the numbers have come at 1193.